Hello, you are welcome, and today we'll be looking at swing trading. As you have seen it already from the description, set, forget, leave. So what are we going to study in this swing trading? We're looking at what is swing trading, the importance, and then the best time frame to use to be able to be profitable, because that is the major focus of why we are trading. Okay, so let's go into it proper. What is swing trading? Simple definition of it is the art of holding onto trades over a long period of time. And that long period of time can be, for hours, for days, for weeks, even for months, and so forth, depending on what prices, providing at that particular time, or days, or weeks, or even months of that particular trade. Okay, so and we know our trading already involves either we are buying or we are selling. So we are expecting price to come to our zone, our entry. Like in this example now, this is the market structure. We want price to come there and then tag us along with it. We also want price to come here and tag us along with it. All of these drawing that I'm drawing here, they are just candlestick, representations. So this one is just line drawing, and this is how they appear on the chart, candlestick representation. Okay, so now that we know what is swing trading, let us go into why it is important. The importance of swing trading. Now, the first thing first is that it helps to make better informed trading decisions. What I'm trying to talk about here is, there are a lot of trading time frame, 1 minute, 15 minutes, 30 minutes. As a beginner, when you just come into the trade, you want to trade, you don't even know which of the time frame to use, because you see this person teaching you on this particular time frame, you see another person teaching you on this particular time frame, different videos, different time frames. It will make you to be confused, because there are sometimes what works in one time frame may not work in another time frame, because price is giving different information in different time frame. Okay, so what we want to do is to make sure that, yes, since we are sticking with a particular time frame and we know what we are doing, it will help us to make better informed decisions. Because if you are using 1 minute time frame, for example, between an hour, you will be thinking, you'll be reading a whole 60 minutes informations for 1 hour candlestick if you are using just 1 minute. I hope you are understanding me, because I'm not saying the 1 minute candlestick is not bad. It all depends on your strategy. But you will have to be processing more informations for you to be trading lower time frame, like 1 minute, seconds time frame, and so on and so forth. You have to be processing more informations, and if you can do that, lucky for you. But if you cannot do that, it's all good. You can switch to swing trading, because our purpose of coming to trade is to make sure that, yes, we leave the 9 to 5 and then be trading. And you cannot be trading when you are kind of occupied with a lot of informations. You cannot have that freedom. We want freedom in trading. That is the purpose of coming to trade. You want that freedom, time freedom. And if you are glued to your charts for trading 1 minute time frame or seconds time frame, you are processing a lot of information, then you ask yourself, where is the time freedom that makes you to come into trading in the first place? Why leave your 9 to 5 job and come into trading? Now, that is one thing you have to know, that by trading with by using swing trading, holding trade over a long period of time, it will help you to make better informed decisions. Okay, now let's go to number 2, less stressful. Why is it less stressful? Like I'm trying to say in the first time, now less stressful because you don't have a lot of information to process. You just have to look at the trade, maybe in a day, maybe in a week. You just have to look at your charts in a week, in a day. You don't have to spend a lot of time, trying to read this, trying to read that. You just have to wait for price to come to your entry. There's even what we call, alerts. You just have to set alert and then wait for price to come to your entry, and you take your trade and wait for it to play out. Meaning that you have set in it, you forget it, and then you go and live your life. Set, forget, and what? And live. I got that quote. I tried to modify it from Bernard Skimpy. You know, the all-time FTMO trader. Is very good with what he does. He's on YouTube, Instagram. He's very, very good, and I'm learning a lot from him. That is why I'm trying to share this information with everyone to help us to improve in our trading. Okay, so we'll go to number 3 reason why swing trading is important. Number 3 is that it gives long-term success with opportunities. What this is talking about is this. There are some people, maybe that particular day, the candlestick that print for that particular day is just giving a particular information, like maybe buying informations. Okay, now market does just price does not just move in a straight line. We all know that it moves up, down, up, down, up, down, so on and so forth. And this many movements in a daily candlestick may just, one daily candlestick can give a lot of 1 minute informations, a lot of 15 minutes informations, so and so forth. Okay, now maybe even that particular month, the kind of candlestick that we print out is just maybe buying candlestick, and then a particular buying candlestick, and some people will see that particular strategy and they will be going along with it. Now the following month, when price give another action, another price action print out, another type of candlestick print out, you see that those type of people that were successful with that particular candlestick that was printing during that particular month or that particular day, they will now be having losing streaks and all of those, and some of them will even give up trading. They will say, oh, trading is not for me, I'll be losing a lot of money, all of those things. That's why you see a lot of people pop out on YouTube to give trading advice, trading informations, maybe because that particular month the type of candlestick that came out is the one that fits their strategy. Okay, but if you are trading long term, meaning you are using swing trading, it will allow you to read information clearly without stressing yourself, and then with that you have a mindset for what? For long-term success. With any trading opportunity that you see, it will have you set up for what? For long-term success. That is what I'm trying to talk about here. Okay, now let's move to number 3. Number 3, we'll be talking about the best time frame for trading. But before we go in that part, into the recommended time frame, let's try to understand our time frame. I've explained all these things in the previous videos, so you can check them out. Now there are 2 major aspects we have to consider. The first aspect is what? We have higher time frame and we have lower time frame. Now the higher time frame is for checking out your market structure, while the lower time frame is for what? Entry. It's also for market structure. And what the lower time frame does is that it also gives us more details about the higher time frame structure. Okay, maybe the higher time frame is bullish, and then you will see that in most cases lower time frame will be what? Bearish. But when the lower time frame is bearish, we have our mindset that since the higher time frame is bullish, there will be a particular time that the lower time frame will also be what? Will be bullish. So the lower time frame will now move along with the higher time frame, and with that, it is what we call moving with the what? Trading with the trend. You are trading with the trend. Maybe at the time in the higher time frame, price is moving upward, but in the lower time frame, price is moving downward. Then you wait probably for price to come into the higher time frame alignment, and then you trade along with higher time frame using the lower time frame scenario. That's what I'm talking about. In this, we can understand this with this little diagram here. You see that in the higher time frame, price is what? Is bullish. I've explained this type of market structure several times in my previous videos. Please do well to check them out. Price is making bullish movement, inducement taken, break of structure, another inducement is provided here. Price coming to the other block in the higher time frame. Then by the time you go to the lower time frame, the corresponding lower time frame, okay, there's a reason why I'm saying the corresponding lower time frame, not just any time frame. maybe you want to use daily, maybe for example daily is your higher time frame, then you are going to 1 minute, 2 minutes, all those things, and it is not something that you have back tested that okay, this particular time frame in the lower time frame, it is what fits the higher time frame. You have to get it right that okay, this higher time frame, this is the best time frame I can use for it in the lower time frame. Okay, so with that said, going to the lower time frame, you will see that price will be giving you downward movement, meaning price is selling, but there will be a time when price now come into the higher time frame range. When price come into there, price can give us this type of market structure, telling us that yes, it is ready to move along with what, with the higher time frame trend. Higher time frame is moving upward, so therefore when lower time frame is also moving upward, we are good to go. Those type of trading give high probability. Let's move on to the next. This is just something I formulated. I said swing trading time frame tree. There are a lot of time frame we can trade. You can check them on your trading view or your MT4, MT5. There are a lot of them that you'll be confused which one to go for. But all the information I'm trying to provide here, there are things that are back tested, for tested, and also what live trade them live. So I'm trying to share this to help us, anyone that is confused also, to get this right. Now coming to the swing trading time frame tree, like this is just what I formulated to help us to get along with trading easily, since we are using swing trading. Now you see on your chart, you see the candlestick, you can see the yearly candlestick. Now that is very enormous and we want to trade and make profit. The time frame with respect to the candlestick, we can divide them into different sections. Now on my left hand side, you can see the monthly time frame. The candlestick will be available there. You can see also the weekly time frame. Now what do you do on the monthly time frame? That is our higher time frame. On the what is following there is the daily time frame. On the daily time frame is we can say the medium time frame, that is MTF, medium time frame. Now the other one you can see there is the hourly time frame, known as the lower time frame or the entry time frame also. Then on the right hand side, we can see the weekly time frame. Then we can see also the 4-hour time frame, and we can see the 30 or 15 minutes time frame. What this is saying that the weekly time frame is higher time frame, the 4-hour time frame is the medium time frame, then the 30 minutes time frame or 15 minutes time frame is the lower time frame for trading. Now, not to confuse us, this is very easy. The information that monthly time frame is showing is also in sync. It's also synonymous with the daily information. So when price is bullish in the daily, it's trying to tell us that in the monthly, price is also bullish. Monthly may be bullish and the daily bearish, but our trading will give us more probability if we stick with what the daily is telling us. Then there's a time that the daily will not come in alignment with what the information of the monthly is also saying. Okay, so we can ignore even the monthly and go with the daily. We can use the daily as our higher time frame, then we cannot use the hourly as our lower time frame. The same thing applies to the weekly. We can say okay, the weekly time frame is giving information, the 4-hour time frame is giving clearer picture information about the weekly time frame. I hope you understand what I'm talking about, like what I was explaining, higher time frame and lower time frame. That the lower time frame gives more information, clearer explanation of what the higher time frame is doing. So in this scenario, the weekly time frame and the 4-hour time frame, they are giving almost the same information. Okay, now we can say let us stick with the 4-hour time frame as our higher time frame, and then we'll now use the 15 or 30 minutes time frame as our lower time frame. Now, care to say that no matter the strategy you are using, you can also use the medium time frame as a direct entry. In as much it fits into your criteria, you can also use the lower time frame as your direct entry, irrespective of what the higher time frame is saying, in as much it fits into your criteria. So the higher time frame and the lower time frame, they can both be used in their own different ways. They can be used together, and they also can also be used separately. Okay. Now let's finalize this. The final of swing trading. Let me give a side note. What is the side note? For beginners, trading time frame is like relationship or marriage. More peace of mind to There's more peace of mind involved with just one partner. Hope you understand what I'm talking about. If you are going into a relationship or into marriage, you have more peace of mind with just one partner. When you are not cheating, you are not going from year to year. While some people that are not beginners, like they are experts, that's why you see some people can be polygamous and they will have peace of mind. But that is just select few. In just 100 people, about 90 or even 95 people, they cannot handle polygamous marriages. Okay, but they can have a lot of peace of mind when they are just with one partner. I hope you understand what I'm saying. So there are some people, they can trade a lot of time frame, different time frame, going from one place to another, 1 minute, 5 minutes, 15 minutes. There is no standard rules. This is just application of common sense. There are some people, they have multiple partners, different boyfriend, different girlfriend, and they are still successful, they are still living fine and doing their thing. While there are some people, when they try such thing, they will be doomed and damaged for life. So it is just common sense that when you stick with one partner, there's a probability of just having more peace of mind and saving you a lot of stress. Now, for experienced traders, it is like having two eyes. At least two time frame will be fine. So what I'm trying to talk about here, for beginners and experienced traders, they can use this second scenario also. It's just like having two eyes and using them. Not just to have them, you have your two eyes and you can use them. You can see that you can see clearly with one eye. There's no doubt with that. Then you can also see clearly with two eyes. That is just common sense and what nature can easily explain to us. To finalize this, since we are using the swing trading pattern method, recommended time frame is what? The higher time frame. Stick with the 4-hour time frame. You can look for your market structure, even your entry, all of those on the 4-hour time frame. Then on the 15 minutes time frame, you can use it for your entry or even its own market structure. Remember what I'm saying, that the higher time frame can be used separately on its own. The lower time frame can be used separately on its own also. Or you can say, okay, higher time frame, I want to use the daily to mark my market structure. Then in the lower time frame, which is the 1-hour time frame, you can use it for your entry. So you can use it together and you can also use them separately also. So for me, for you to have more trading opportunity, I would suggest to stick with this first scenario. Then as time goes on, you can do what? You can even use the tool, like different charts for this. You can put a particular chart just for 4 hours and 15 minutes. You can be monitoring price action there. Then on another chart, separate chart, you can be monitoring price action on the daily and the 1-hour time frame respectively, okay, or even together. All of that is just my explanation about swing trading. I hope this is very helpful to you. Please like, share, comment and follow up so that you will enjoy your being here and you will attain profitability. This I promise. In as much you are practicing what I'm teaching you, you are putting in the work and the effort, you will be profitable. Thank you very much. Have a great time.